Welcome back. Thursday morning here on Squawk Box Asia. It's just gone 8:30 a.m. Hong Kong, Singapore time. This is how markets are shaping up so far. Lead from Wall Street, mixed, and that is pretty much the way it's playing through out here in Asia as well. 30 minutes into trade, Tokyo is down a fifth of 1%. The Korean market is looking solid, if not strong, though up 0.6 and better. Ahead of that press conference by the new president, Lee Jae-myung, that's coming up in less than 30 minutes' time. Sydney is softer by about 0.1% right now. So moving on, crypto firm Ripple taking its cue from rival Circle and has applied for a U.S. banking license. The company is also eyeing a Fed Master account for access to the central bank's payments infrastructure. And that would allow it to hold its stablecoin reserves directly with the Fed. That move comes as Senate lawmakers approved the so-called Genius Act last month, a bill seen as a game changer for stablecoin regulation. Now, Ripple is closely associated with the XRP ledger network. XRP token looking like this right now. We're at 222.99, up close to 3% there. Chery?
Yep, and let's do a quick check on Bitcoin right now. Yesterday was actually a very bullish day for Bitcoin, and now 108,878 is what we see here, and a little bit of a dip early morning yesterday, and then it's just sort of making up the lost grounds there. And of course, we teased it. Peter Chung is head of research at Presto Research. Our guest host, Gautam Chadha of RBC Wealth Management, is also joining the conversation as well. So Peter, you heard the teaser. I'm not grilling you, as you say, but are you sticking to the price target for Bitcoin? Could it go even higher, or? I don't know.
I'm sticking with it, yes.
Okay.
So I guess what was kind of surprising to us was how, I guess, stubborn the Jerome Powell has been with the rate decision. And I kind of share the same view with the Trump, I guess.
Trump.
So that was kind of unexpected. So I think that what that did was maybe push the timing of liquidity loosening. And as a result, I think the Bitcoin price is maybe not appreciating as fast as I had expected in December when I made that forecast. Right. But I think there are some signs that indicate that the liquidity loosening will happen in the next few months, such as the Trump's tax bill, and also the comments from a few Fed officials been quite dovish recently. Right. And also there has been a rule change on the so-called the supplementary leverage ratio in the banking sector, which will allow the banks to hold additional $5 trillion worth of treasuries if it is implemented. So I think considering all of this, there are some reasons to hope that the liquidity conditions will improve substantially in the second half.
Really quickly, because I do want to touch on stablecoins with you today, but really quickly, I'm hearing about Solana ETFs, that we already have Ethereum. Do we need all these altcoins ETFs, or is this season going to prove that Bitcoin is it and somehow test the cases for some of the smaller names? Why do they need to coexist?
Why do they need to coexist? Well, I mean, I think...
I know it's different blockchain technology and all, but yeah.
Correct, yeah. So I think one good kind of gauge to look at to assess the demand level for this type of altcoin is to look at the so-called the global ETPs that exist outside the U.S. and in places like Europe, for instance. So in the case of Solana, globally, there's already about over $1 billion worth of AUM under these ETPs outside the U.S. So that's always a good indication, I think, for U.S.-listed ETF, for something like a Solana, for instance. So the demand, I think, is there. And whether we need additional ETFs or not, I think it's all kind of also another factor that drives that decision is people want to diversify their crypto exposures. So for these people, having additional options other than Bitcoin and Ethereum is probably going to be a plus.
Let's talk about BTC versus stablecoins, because people who got into Bitcoin early, I mean, I thought they were saying that eventually everything is going to be priced in Bitcoin, but that doesn't seem to be the case, or I mean, maybe you disagree, but so it certainly looks like to me Bitcoin is a store of value and stablecoin is a sort of like the banking infrastructure. Is that how I should understand? And how do you define their roles? And what does it really mean for the dollar?
Right, yeah. So
It's a lot there.
Yeah, yeah. I mean, I think the one thing that we need to keep in mind is when we look at the crypto sector, it's not a mature sector. It's constantly evolving. It's a nascent, emerging technology. So what we see right now, we shouldn't take it as the final version of what this technology is going to look like. So now, with regard to the Bitcoin being a unit of account for these assets, which I think is the question that you're asking. The unit of account usually comes towards the end of money evolution cycle. I think I might have mentioned this before, but usually the first stage is the store of value, which is where we are right now. And then comes the medium of exchange. And then after all this, then you see the unit of account being applied to these new money-like asset, right? So unit of account application of a Bitcoin, I think, is still some time away. What it means for the stablecoin, I think, was another question you asked. I think stablecoin, what it does is it supercharges U.S. dollars. So what I mean by that is that there's a lot of demand for U.S. dollars as well as U.S. dollar denominated assets around the world. But not everybody outside the U.S. can easily access them. What stablecoin does is by putting it on a blockchain, which is essentially the frictionless value exchange rail, anybody can. It's very easy to access U.S. dollars all of a sudden. So I think that's why somebody like the Treasury Secretary Bessent is very keen on this, because by allowing U.S. dollars to be more widely accepted globally, it helps promote the U.S. dollar hegemony.
Right. Downtown, do you want to comment on this?
Yeah, please. Good morning, Peter. I guess from that comment around the Treasury Secretary Bessent, where do you think the additional or the next set of demand is going to come from for holding US dollar-backed stablecoins?
It can come from many places. I mean, but I guess I can divide it into two, from the U.S. and outside the U.S. From the U.S., it'll probably come from the large retailers or tech giants who can use U.S. dollar stablecoins as a better alternative for their existing payment technology or platforms. And from externally, it will come from, I think, mostly from the emerging markets, where they are keen to access U.S. dollars as a form of store of value, because their local currencies are often under very unstable monetary regime, and therefore they don't trust their own currencies because of high inflation. Or for remittance uses, for instance, like even in Hong Kong, we see a lot of domestic helpers here who spends a lot of their salary just for the remittance services. They charge something like a 10 to 20%. So by being able to wire this money on a value exchange rail that does not have a middleman, they can save a lot in terms of these commissions they have to pay for the existing middleman.
Peter, Martin here. Great to see you again. Always a pleasure having you on the show. And you knew I was going to ask this, right? You've got a 210 target on BTC Bitcoin. Is that right? Justify that.
Yeah, so the 210,000 target was made in December last year for 2025, end of 2025. And I'm still sticking with it, although I see that there's maybe a risk that the timing of achieving the target may be slightly delayed, because there was unexpected holdback of monetary loosening. But I see some early signs that could come in the next few months. So that's why I'm still sticking with the target price.
Only 110,000 away. Got him?
And on the way. And I think just back on stablecoins, Peter, one thing would be great to understand is how do investors get comfortable with the risk? Because as I understand, stablecoins are backed up by something like another asset, like a US Treasury. What's the robustness of the mechanism, or how robust is that mechanism that investors get comfortable with that risk?
Yeah, I think a good mental model to have about stablecoin is it's nothing more than tokenized representation of a money market fund. It's backed one-to-one, just like another way to put it is maybe ETF. So let's say the gold ETF is equitized representation of a gold. And the reason why it tracks gold price is because it's it is backed by gold one-to-one. Because it's backed by gold one-to-one, whenever the price gap comes in, there will be people who participate as an arbitrage opportunity to close the gap. So that's the basic mechanism of a stablecoin. And I think for something like a Tether, which has been around for over 10 years now, it's already been time tested that through ups and downs of the crypto market, it was able to maintain its peg. And I think that there should be enough of kind of evidence to the market that stablecoin is going to be able to maintain their value.
What about Asia? Hong Kong recently passing stablecoin law. What kind of grade would you give to that? And South Korea, a little bit of back and forth, but certainly sounded like the central bank chief was budging. Do you see a lot of Asian central bankers backing on this, sort of giving into this pressure? Because if you can beat them, join them kind of mentality with stablecoins.
Yeah. I give a lot of credit to Hong Kong government, actually.
Okay.
Yeah. So actually, they approved the stablecoin bill even ahead of the U.S. Let's not forget that it's not done deal yet in the U.S., right? It still needs to go through the House.
Yeah.
But the LegCo in the Hong Kong has already passed it, and I think it's going to be implemented starting from August. So they are in a way ahead of the U.S. And also they don't have, there's some differences there in the Hong Kong stablecoin bill. The two biggest differences, firstly, in the current version of Genius Act in the U.S., they ban yield-bearing stablecoin. And secondly, they also banned tech giants from issuing stablecoin. None of those exist in the Hong Kong stablecoin bill.
So probably easier in Hong
Yeah, that's right. Yeah, so that's why I think recently we've seen an announcement that somebody like Alibaba is interested in becoming a stablecoin issuer, for instance. So that's where I think that because of that difference, that this is possible. And then I think you asked about maybe other Asian governments and what's happening in South Korea. I think what's happening in South Korea is a little bit kind of, in a way, it's a bit of a shame because I think there's a lot happening in the stablecoin space, but I think the central banks and the financial authorities are a little bit hesitant and maybe overly concerned about its potential negative impact.
Right.
A lot of which, in my view, is founded on some misunderstandings. So, for instance, one of the things that I think the BOK governor mentioned was that somehow it'll weaken the BOK's control over the money supply, but that's not the case because stablecoin actually does not create any additional money supply.
Right.
But there seems to be some misunderstanding there. So these are the examples of some of the misunderstandings that the Korean government officials have that I think is maybe unnecessarily delaying this process.
Right, right. Peter, it's great to have you on. Fascinating conversation. That was, of course, Peter Chung and